Over the last couple weeks, I have been talking about XDC because of all the noise that it is making, but I feel like this is still going unnoticed by most people in this space. But maybe some of these major integrations, like for an example, the Layer 0 one, is starting to actually change that. And the reason why I say that is because number one, Layer 0 is massive. They have over 720,000 plus followers. So just imagine how big their actual platform is. And if we actually think about that, let's take a look at this announcement from Layer 0, which was interoperability is the standard for gas tokens, 100%. Historically, gas tokens were tied to their home chains. Now, Layer 0 unlocks native expansion, enabling Layer 1s and even Layer 2s to officially bring their tokens to new chains. Why it matters? Well, Layer 1s and Layer 2s retain full control. Token issuance, chain choice, security setup, zero slippage transfers, move infinite value for just the price of gas. Composable tokens can be listed on dexes like Hyperliquid, Aerodome, and even PumpSwap after expanding to new chains. Layer 1s and Layer 2s are the home for gas tokens, and Layer 0 is the rails to bring them everywhere, unlocking new use cases, liquidity, and users for tokens. Now, when we think about that, right, this is a huge platform, massive platform. XDC is dominating it with $2.31 billion. Guys, look at the other projects here. You have C, Plume, Sonic. I mean, these are giants. And XDC is the number one token on Layer 0. Now, on top of that, XDC did put out a post regarding this. By the way, 99,000 views, pretty good engagement, a lot of eyes on XDC. Here we have the announcement from XDC Network. XDC leads the charge as the number one gas token built on Layer 0 with a 2.31 billion fully diluted value. With Layer 0 powering seamless native expansion, XDC can unlock broader utility, liquidity, and composability. XDC is now interoperable across chains without compromising security or control. So yeah, this is very exciting to see. Again, I think that some of these big moves happening and the success of them is going to put a lot of eyes on XDC. I recently talked about the tokenization push, right? All of this stuff is very exciting, and it's all pressure building behind the scenes, which will lead to major price action. And I want you guys to realize that. Now, on top of this, we also have VCs getting very excited about XDC. Here we actually have the big announcement from Brink VC, venture capital, platform. Most blockchains weren't built for enterprise adoption. XDC Network is different. It's purpose-built, Layer 1, designed to scale with institutional demand over the next decade. $50 to $60 trillion in real-world assets are expected to move on-chain, creating unprecedented liquidity and capital efficiency. Here's why XDC can create an impact. It slashes energy consumption by 99.5% compared to conventional smart contract platforms. Near zero transaction costs make XDC a viable backbone for high throughput applications from RWA to even DeFi. As ESG becomes non-negotiable for financial institutions, XDC's efficiency give it a structural advantage in regulated markets. As financial institutions seek scalable, cost-effective, and compliant blockchain solutions, networks like XDC that prioritize efficiency and security will capture the lion's share of this emerging market. Now, if we think about this, right, here we have the $50 trillion opportunity. Again, when we think about on-chain, everything is moving on-chain. Tokenization is the push. And even over here, we do have institutional adoption requires more than throughput. It demands efficiency, cost predictability, ESG alignment. Again, XDC is, really focused on all of these things. And also over here, we have XDC delivers 99.5% lower energy use than typical smart contract chains, near zero transaction costs for scale sensitive use cases, and then tailored architecture for RWA tokenization and DeFi. $50 trillion on-chain opportunity coming from a VC firm. Think about that. Venture capitalists are now on board the XDC train. This is very exciting, and it's very telling where we are headed. Some of these utility plays, I'm telling you guys right now, they are going to be life changing over the next couple of years. And I also do think that this cycle, XDC is going to do some very, very exciting things. And I think everyone should be paying attention to some of these moves happening around XDC. For an example, let's actually go back real quick to December of last year. Archix and XDC Network form partnership to drive innovation and growth in RWA tokenization. This is a big move that we outlined on the channel back in December. And even today, this is still a very, very exciting move because when we think about how much value is tied to tokenization right now compared to where we're headed, I mean, guys, the sky is the limit for some of these projects. And we already know that Archix is working on some very, prominent names. Ripple, Hedera, Algorand, you name it. I mean, if you're thinking about utility-based networks, 9 times out of 10, Archix is going to have them tapped in. And leading up to roughly, February or so, we did see a big update, right? XDC Network launches first 4 money market fund tokens in alliance with Archix. And this is Aberdeen, State Street, Fidelity, and even BlackRock. These are 4 dominant names in the world of, we're talking about massive asset management companies, TradFi giants, and they're very dominant. And the fact that XDC is working with Archix on this proves to you how big XDC will be around the tokenization revolution. Now, the reason why I bring this up, because this is old news, is because of this video clip here that got posted by Subjective Views. This is actually from Beyond Broke's YouTube channel, Jake Claver. This is a huge post because it provides us with a little bit of an insight on what's happening around these tokenized money market funds. We have here Ken Chapman, head of US for the XDC Network, discusses how the XDC Network, in collaboration with Archix, has tokenized money market funds managed by BlackRock, Fidelity, State Street, and even Aberdeen. Check this out.
So you listen, maybe should to find out is this year has been kind of a big year for XDC. This year, back in February, we had BlackRock, State Street, Fidelity, and Aberdeen all deployed money market funds on XDC. Wow. Via Archax. Archax is an exchange broker, custodian in Europe. And that was a big deal. And it kind of flew under the radar. And a lot of people just didn't really, kind of understand the significance. But, and it was also in Europe. It wasn't here in the US. But the significance of that is once, and again, the amounts of those were substantial, but that's not the important part. The important part is each one of those institutions has now had a taste or has now interacted and done something and gone live with XDC. That's the hardest part. Right. Like when I was at Wells Fargo doing anything, there's two things that kind of to do anything with a blockchain like XDC. A couple things come up. One is who else is doing it, and so you had to say, well, this other institution similar to Wells is also doing this. So you have that, and then you have to get it through all of your internal control functions, whether it's your legal, compliance, risk, whatever it is. So the fact that we now have, 4 very large, I mean, BlackRock's the largest asset manager in the world. And so we've already, kind of solved the who else is doing this. Well, who else is doing this? We have the biggest asset manager in the world. We have one of the top 4 custodians in the world. State Street is doing this. One of the largest RIAs in the world, Fidelity, is doing this. So, as far as who's doing it, we have the who's who. And so it is a lot easier now to do this at scale. And so not just with those companies, but with other similar companies, because you can walk in the door and have the conversation. And and again, I was money market, but it doesn't matter whether it's money market or something else. It's a fact. It's a financial, right? And so you can walk in the door and say, "Hey, we've already done this, and we've already kind of gotten the Betty Crocker seal of approval from some of these larger institutions because they've done this with us because this has been done. It was done with Archax, was the partner they worked with, but XTC was the chain, but they won't do that unless they do all their due diligence. Right. So the fact that that's been done, now it's much easier to go to the other institutions and say, hey, we want to work with you. And it's no longer the conversation of, who the heck is XTC? you know, it's now we can say, listen, this is who we are, and we have some of the biggest institutions in the world are using our technology. So that that in and of itself will gives you get credibility, but also will get you in the door to have that institution take a look. And also, people, that work in these large institutions, some of them, have a different mindset than we do working in digital assets. Some of these, they don't want to lose their jobs, and if they can come out internally and say, hey, I chose XDC, but also one of the it's part of my rationale in choosing them is before I chose them, so did BlackRock, so did Fidelity, so did State Street. It's very easy, within your company to just to say, hey, that's justifiable.
Yeah.
So yeah, I mean, listen, when we think about what's really happening with a lot of these networks, we really the main thing that I have been focused on is how TradFi is embracing these projects. I mean, it's one of the craziest things, right? Go back a year or two, maybe even just 3 years ago, and this would not have been possible. In fact, nobody would have thought that this was going to happen in 2025 after what happened with FTX. I remember during 2022 when that happened, going into 2023, almost everyone was like, there's no way that, crypto is going to, see major adoption for a while. A lot of people thought that set the, entire market back years with all the progress that we made leading up to FTX. So it's kind of crazy on comparing where we are today versus then. And it also goes to show you where we're headed. I mean, listen, you have these big players with assets under management in the trillions of dollars, BlackRock 10 trillion. I mean, just think about how insane that actually is. I'm very excited for where the space is headed. And I do think that projects like XDC are going to be very dominant players in this world of, I don't want to call it Wall Street 2.0, but this is basically the financial revolution, the largest financial revolution, I should say, in history. And every asset management company is going to line up. It's not just going to be around Wall Street 2.0. It's going to be around everything. Banking, the way that people are paid, the way that money is moving around the world. Everything is changing and it's moving on chain. And it's really kind of starting with the biggest players out there like BlackRock, Fidelity, State Street, you name it. But on top of that, right, XDC has had a very incredible last few weeks. We have been seeing more integrations with wallet companies like SecuX, for an example. Don't know about SecuX, never utilized them, don't really know who they are, but again, more wallets, great. It means more tools that, is provided for developers, for investors, etc. So love to see this. Again, just more recognition of XDC, more players looking into it to integrate it and really open the doors for it. So love to see it. On top of that, integration. So Crimbo just recently partnered up with XDC to integrate institutional grade compliance into the blockchain. This collaboration embeds privacy preserving auditable compliance directly into XDC, positioning it as the go-to platform for financial institutions. Love to see this. This partnership sets a new standard for blockchain and finance, ensuring that financial institutions can embrace blockchain with confidence, security, and scalability. With built-in support for regulatory requirements like FATF travel rule and KYC and AML, the integration empowers institutions to adopt tokenized assets, stablecoins, and decentralized finance solutions with full transparency and zero off-chain dependencies. Key benefits: seamless compliance and regulatory alignment, secure on-chain identity management, tailored workflows for banks and custodians, real-world use cases for tokenized assets and DeFi. As the demand for digital assets grows, this collaboration positions XDC Network as the future-proof backbone for institutional blockchain solutions. So again, these types of integrations were happening all throughout May. June is another month where we're starting to see even more integrations. XDC is starting to make a big name for itself, and it's something that I'm very happy to see. I know that I kind of sound like a broken record when I say it, but like when we think about some of these networks like XDC, years ago, nobody even looked at it. Nobody even cared about it. Today, there's so much noise being made. And I think that it's only a matter of time until almost everyone knows about XDC. If you think about it, VCs are lining up now. We're seeing more integrations. We're seeing more, acceptance of it, adoption of it, and even use of it. And on a lot of these platforms that are integrating XDC, XDC is quickly growing to being the #1 project. So I think that this is incredible. I think that we are in for a very bullish year for XDC going forward. I mean, we're halfway throughout the year already. The rest of this year, I think, is going to be very exciting. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.